It's time to cut interest rates. That was the clear message from the Prime Minister today as she argued the government's promise to deliver a budget surplus gives the independent central bank plenty of room for a rate cut. It adds to recent public pressure on the bank to ease the burden on households and businesses. Shortly I'll discuss that with Finance Minister Penny Wong. But first, as Stephen Long reports, Julia Gillard's comments come as a leading economist and former Reserve Bank board member backed calls to overhaul the Reserve's mandate, putting less emphasis on taming inflation and more on jobs.
350 workers shown the door this week at Toyota.
You know, I need this job. It's my life, yeah? Mortgage, single mum.
1,200 jobs shed last year at BlueScope Steel. A high Australian dollar is crunching manufacturing, pricing out exports and making imports cheaper. Propping up the currency, interest rates near the highest in the Western world. The Reserve Bank's under enormous pressure to bring them down.
In the current economic environment, should the Reserve Bank consider it appropriate to change the cash rate, this could deliver widespread benefits for households and businesses.
Today, the Prime Minister added her weight to the calls, arguing the government's determination to deliver a surplus, no matter what, is all about making room for the Reserve Bank to cut.
There is plenty of room for the RBA to move further if need be. And to all of those calling for rate cuts, you should also be calling for a surplus, not opposing one. A surplus budget provides room for monetary policy.
But to bring the budget back to surplus, the government will have to wield a very sharp razor, despite a sluggish economy with below-par growth, imposing one of the biggest fiscal tightenings in the nation's history.
A bigger movement relative to the size of Australia's economy than we've seen at least since 1954-55, which is as far as the figures go back, and probably the biggest movement in the budget balance since Sir Arthur Fadden's so-called horror budget of 1951-52, when, as he famously said afterwards, he could have fitted all of his friends into a telephone box.
It's a high-risk strategy, one that critics say could push the country, or large parts of it, into recession.
We've got a lot of Australia already on the brink of recession, if not in it. The danger is this will push them over the brink into recession, with unemployment rising and with growth falling, and that this will in turn mean that the government will not get the budget surplus it wanted anyway.
Tim COLEBATCH, economics editor at The Age newspaper, has written extensively on the folly of the surplus obsession.
It's pure politics. Ask yourself, given the state of the Australian economy at the moment, is this a good time to cut 2.5 percentage points out of GDP, to cut $40 billion out of this weakening economy? And I think the answer is very clearly no.
I think cutting the budget by the size they're talking about is an enormous gamble, really. I mean, Tim's right. This is a big withdrawal of income and stimulus from the economy.
The government's banking on a massive surge in mining investment, with $315 billion of projects in the pipeline to counter its huge cuts to create a surplus.
That's the gamble that's going on.
But the problem is that if that boom does materialise, it could make the Reserve Bank reluctant to cut rates very much, despite what the Prime Minister says. Fearing inflation, it'll feel it has to suppress the rest of the economy to make room for the boom.
If there's going to be a really big boom down the track and the surplus just offsets the boom, then you don't really need the interest rate cuts that much.
What we do know is that forecasts for 18 months, 2 years' time by the government and by the Reserve have been consistently wrong.
For the RBA Governor, inflation is the name of the game. Under a deal brokered by Peter Costello and continued by the current Treasurer, the Reserve Bank has a formal agreement with the government to keep inflation at an average rate of between 2 and 3% over the economic cycle. Yet the Reserve Bank Act actually says nothing about inflation. It says the bank's role is to keep the currency stable and maintain full employment. A chorus of Labor mates have now urged the RBA to cut rates to help bring down the dollar.
I believe the RBA has made the wrong call. I think that the manufacturing industry, in fact most homeowners in this country, need a cut in interest rates.
And called for a change to the deal between the government and the bank to put the focus on jobs. Today, a heavyweight of the economics profession has given qualified support to that view.
I don't think anybody that you and I think highly of thinks that any bank should be fight inflation first.
ANU Professor Bob Gregory, a member of the Reserve Bank Board for a decade until the mid-1990s and world-renowned for the Gregory thesis about how resources booms hollow out the economy.
Over the last decade or so, the balance of views about what the bank should do has shifted towards being more inflation conscious, because in the past decade or two inflation was a key issue.
Professor Gregory says the next letter of agreement between the Reserve Bank Governor and the Treasurer should be tweaked to emphasise employment and make it clear the inflation target's flexible.
I think the next letter that's written should be a bit more neutral. I mean, I don't think it should say, oh, forget about inflation, focus on employment. It just should be a bit more neutral.
But Professor Gregory says the Reserve Bank's mandate should not be changed in the current climate.
At the end of the day, we don't want the bank being seen to be a part of whatever the current political pressure is.
There's no evidence to suggest that the Reserve Bank of Australia has, in the last 18 or so years, been unduly zealous about the pursuit of low inflation. And one of the lessons that we should all draw from the financial crisis is that inappropriately low interest rates can be as damaging in their own way as inappropriately high interest rates.
Australia's enjoyed 2 decades of near continuous economic growth, with an independent central bank steering rates and targeting inflation. But the expansion can't last forever, and the bust is overdue.
Stephen Long with that report.